And here we are again. So today's video is going to be quite quick because I'm about to go catch a flight. But there was a bit too much that happened yesterday for me to skip the video today. So in front of you we can see where we left off. And I said what I was hoping would happen was we would break down from this bear flag, we would round back and we would retest the back of the trend line or this support level here. But, as we can see, if we play it out, this is what happened. So we did end up breaking very firmly down, just like I wanted to. And then we put in this indecision candle. So that was great. I thought that was the point where we're going to round back. We were going to retest this level. I would get in short, and then we would collapse. But, if we play it forward another candle, we see that happened. So we did round back, but we retested this bottom wick here. Soon as we touched that almost to the dollar. Touched that, and then from there just absolutely collapsed. And unfortunately, I missed the trade. But this highlights a really good point. So sometimes this is going to happen, and you're going to have a strategy, and it's nearly going to play out. But it's going to retest somewhere slightly lower than you thought. Maybe you didn't anticipate it would retest that wick, you thought it would come a bit higher. It retests that wick and then it collapses. So you missed the trade. In that situation, you're left with one of two options. So either you could chase the market down and pay down to get into the market. So maybe you wanted to get in up here with a stop maybe up here somewhere. And then you have that as a risk to reward. But then if you pay down, you can't move your stop down because then you're just arbitrarily placing your stop. So you've got to leave your stop there, but you're now getting in down here somewhere because you're paying down to chase the market. Of course, that's affecting your position size because your risk parameter is now much wider. Your stop is much larger. So your position size has to decrease to keep your risk management in line. Now the market has to go much further to make equivalent profits. And you see there's just this cascade of bad events that happen whereby you're no longer in a very high probability, high risk to reward setup. You're now in a lower probability setup because you're paying down and your risk to reward is much lower. So there's just a cascade of negative effects there. Or you could just wait. And that's the much harder option to take. But if you have the patience of waiting it out, it will invariably be the better way to do it because you will find the more high probability setup and you will find the better risk to reward setup. But here in this case, we missed this trade. So I didn't chase it. I just waited, hoping that we would collapse here and then maybe retrace into the bottom of these wicks. Then I could get in here short with a stop above these highs. We'll just continue playing it out from here. And we consolidate a bit there, gave myself a bit more hope that we might retrace, just consolidated for a few candles and then collapsed again. And then this very next candle did come retracing all the way back up into this area. So there, you could get short if you really wanted to. Personally, I don't like getting short when we fly down very aggressively and come careening back just as aggressively, because quite often that can indicate a shorter term bounce and getting in short will just lead to you getting stopped out. So I would rather see a bit of consolidation and then coming up to retest this area, then I would have got short. In this case, I didn't get short, but if I had have, it would have worked out pretty well. And here we are in real time now. So like I said, this trade here on this candle could have worked out very well in this case. If I had got short on the retest there, we would have got in at 8,231 and we would have dropped down to the low here at 7,668 or so. So, I mean, that was a pretty nice profit because your stop would have been up here. So that would have been your risk parameter and your reward was down here. So you're probably getting 2.5, 3 to 1 on that trade. So that would have been a very nice winning trade if you had have taken that. But personally, I didn't. But as you can see here, I had the idea of getting short up here. in the 9,000 range, and we fell down to 78-ish. So that's a lot of drop that I predicted and wanted to get short into, but I missed the whole thing. I didn't make a penny. And that is a very important point in trading. Sometimes this will happen, and it is extremely frustrating. And I'm not going to pretend to be a saint here and say that I'm totally okay with this happening, because it is extremely frustrating, and I have a lot of what if scenarios running around in my head. What if I had just got in short a bit earlier? What if I had just chased the market here? I would have ended up in a good trade. And what if I had found a better entry up here or got short up here? Like, whatever. There's countless number of scenarios that your brain will run through. And that's fine as long as it doesn't make you impulsive on your next trade decision. So yes, I'm frustrated and annoyed that I missed this drop because it was extremely telegraphed and I wanted to get short into it, but the setup just didn't present itself. And that's the core of trading, is regardless of what you think's going to happen, you need a setup to get in. And in this case, I was looking for a retrace into a solid area, and I just didn't get it. So I never got into the market, and that's just how it goes. Now I'll just wait to see how the market plays out, and maybe I'll get into another trade at some point in the next couple of days. But for now, you just need to move past the frustration when this sort of thing happens, because it will happen and it will continue to happen. But then there will be other times where you pick it perfectly and you get in short and immediately it collapses, or you get in long and it immediately goes absolutely parabolic. And in those ones, it feels pretty good to be in that market, but when you're not in it, it's really frustrating. But anyway, that's enough about that. In terms of what I think the market's going to do, after a drop like this, I think we're probably just going to go sideways. I do expect that we're going to retrace at some point. A good point might be this low here, because that was the major low of the bear flag. So maybe we retrace back into that area, maybe consolidate from there, go short, maybe go long, I don't know. But we'll just have to watch the price action, see what's likely to play out. But something that needs to be touched upon here is something I mentioned a few episodes ago, which was the log channel that Luke Martin draws. So this is it. We can see it. It's drawn back from way back here at the start of 2017. And the market respected it all the way up through 2017. Then we ended up breaking the top of the channel during the parabolic run up to 20K. When we collapsed down here, we respected it here. We bounced. Now, we're not quite as low as here, so a lot of people aren't panicking because we're still not making new lows. But we have closed outside of the bottom of the channel for the first time ever. And like I said in the video when I covered this more in depth, when we start breaking out of the channel, the bull trend, the bull run is officially over. There is no possible way that you can make any sort of judgment that we're still in a bull run or we're still bullish in any way, because we can't be. We've invalidated the final shred of bullishness, which was we were above the long-term log channel, but we're not anymore. Does that mean we're in for an extended bear stretch like we had in 2014? That's still up in the air. Maybe. I wouldn't be surprised if we did see an extended bear stretch, but I also wouldn't be surprised if we recovered much quicker. So that's not for me to say. But for now, we're outside of the log channel, and that is a bearish sign. So from here, I would expect some downward movement. But we could see a very sharp bounce back into the channel, which would make this whole episode just a bit of a fake out of the channel. And then if we do start to move back into the channel towards the median, then you could say this was just a fake out and the channel is still intact. And then potentially you could say we're still in a bull run because we made a very concerted effort to break the log channel and we couldn't. Yes, we closed outside of it a few times, but we're straight back into it and resuming business as normal. If that happens, then we can maybe say we're still in a bull run. But for now, while we're outside of this log channel and we haven't come straight back into it, I've got to say I'm bearish for now. I haven't sold my long-term Bitcoin yet. I may do if we start to drop significantly, and then I will just rebuy it as we bottom out. But for now, I'm just looking at this as a trader and seeing if I can catch some positions short as we ride out this bearish momentum. But yeah, I think that's enough for today. I'm going to go catch a flight. Hopefully I'll get a video out tomorrow, but maybe not. So until I make another one, I will see you all later.